Right
Yeah.
on. All right, we're live. So I'm glad you guys can join me today. Of course, the market's been crazy, right? I don't know if you guys have been following, but the SPY has been falling like a rock. Every time it pops up, it sells off. Um, the day of, let me see here. I'm gonna share my screen here. Make sure you guys can see it. That one. There we go. Okay, let me know if you guys can see my screen. You guys can see it?
Yeah, 20.
Okay, awesome. The day the uh interest rate hikes happened. I think that was what was it? It was a Wednesday. When was the fourth? Be the fourth. Oh yeah, it was a Wednesday. So rate hikes expected was half a point, so 50 basis points, and it was already expected apparently to the market. I thought, or there was rumor that they were going to raise it to 75 basis points, and that was going to shock the market. So we were very heavy right at the open here. As you can see, it sold off on the 1 hour, on a 4 hour time frame. This red candle right here is indication of a sell-off, right? It sold off fall below, but obviously the 20 SMA caught it. And then since the market expected the 50 basis points raise, it was excited that it wasn't 75 basis points. So it rallied up. But at the end of the day, if you guys really think about it, it was actually a trap because the next day it literally fell off the cliff. It was an obvious trap. Well, hindsight wise, it was a trap. But we know that enable for these hedge funds and banks to unload their positions, they got to make the market look like um, it's going up. So that way, all the FOMO chasers, the uneducated, uninformed, or just emotional traders, catch the upside, and hopefully they're holding, swinging. And I think a lot of people were swinging this position, like following week, like option calls or position itself. And then obviously the next day they just got murdered. Look at this. It blew through SMAs like butter. It did not even care, right? If we go into the hourly, we can see it. Look at this. The moment it fell below the 10 SMA and it just kept going down. And as you can see, also on Friday, it kind of just chopped around. But I also want to go over this indicator down below here. And also even just the setup itself, the candles we've changed. We made some changes due to some finding that aligns with our SMAs. Okay, so we'll go over that. Overall, though, as far as the options trading, um, honestly, I just trying to put more focus into it because the small cap market, which is the ones that I normally scalp, right? As far as just stocks, it has been pretty stagnant. There hasn't been much gap up movements or volatility like back in 2020 and 2021. And so it's almost not worth even trading. It's like literally right at the morning, it would do its quick little volatility, and then the rest of the day is just a headache grind, and it's not even worth scalping pennies, right? But the good news is the large cap markets, which is like SPY, SPX, Nvidia, Microsoft, Tesla, these large caps are actually moving like a small cap behavior. Like for example, like the SPY, right? If you look at the range on SPY, like we go on to 5 minutes, got 5 minutes here, and give you guys a perspective. Like look at this range. So from this low to this high right here, okay? Look at this. It's showing a $9 range. Like $9. That is huge for the SPY, right? And then let's say let's take a look at Apple. Look at this Apple range. Okay. The daily range on Apple, what is this? $5? Like $5 is pretty good for even just trading the stock itself. But to be honest, in option, like a $5 move in options, like That's over 100%. That's like at least a 250% if you can catch the whole entire move, right? And as an option trader, you only need 25, maybe 50% to 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 grow your account, right? Consistently. So with that said, it's well worth my time to put more attention into the large caps, scalping the large caps with options versus me scalping the low float, small cap stocks, which requires me with a large capital to make, a couple $1,000s a day. But in options, you can do that. And the beauty thing about options too is you can scalp, on a cash account. Even let's say you have a $1,000 account, you can deploy $100 per trade, so you can do 10 trade technically, right? And make, a couple bucks from there. But you can consistently grow your account. And I've been watching other people grow their small accounts with options from like $1,000 to 5 to 10 to even 25 or some crazy numbers to like 100 grand, right? Um, of course, that requires discipline, that requires some process, and really sticking to your patterns. And the patterns and the indicators is what I want to go over as well to pair it up with the option trading. Many of you already know that we use the SMAs. For those of you that haven't been um, up to date, I added the more SMAs. So the basic ones is the 10 and 20, which is you guys already know, 10 and 20 SMAs, and then I added the 50, the 100, and then the 200. Okay, along with it's got a daily right here. This is the daily moving average. The daily moving average, for those of you that don't know, it's fixed. Like it doesn't it's data providing lines doesn't change on any different time frames. Like right now I'm on 5 minutes, right? Um, so daily moving average will stay fixed. So right now it's at 159.65. If I change the time frame to 1 hour, right, it's still the same, right? 159, 77. A little bit, I guess, a little fluctuation, but my point is it doesn't really change like the simple moving average. Okay, so go back to the 5 minute. As you can see, simple moving average is always fluctuating based on the time frame. Okay, the reason I added the 50, the 100, and the 200 because it gives you a much stronger supporting evidence or thesis to your directional of the trade. So for example, right here in this area, as you can see right here, right? The price candle was all above all your moving average. So this area right here, it's basically telling you like, hey, um, the trend is in your favor to the upside, and you have a lot of supporting evidence that all your SMAs are your support levels, right? These are your support levels. So there's a lot more buying pressure in this case when it's above all of the SMAs. But if you were just, let's say, relying on the 10 and 20, the 10 and 20 could break because in some different time frame, your, let's say the 10 and 20 is broken and your 50 SMAs could be like down here and your 100 SMAs could be down here, right? So you have all this range from this break to the downside before your next support, right? So it's kind of flying blind and ignoring the rest of the SMAs when you only have the 10 and 20. But when you have all of them stacked up like this, now the upside is in your favor because you're above all of that already. If that makes sense. As you can see, the same thing here. You get the 10 and 20. The yellow line is the 10, the blue is the 20, and then you have the purple, which is 200. And they get mixed up as the chart tends to chop, right? But my point is, you have all this SMAs as your support base indication. Not saying that they're going to hold, but at least in your thesis, if you're long bias, you have supporting evidence that, hey, you have support levels down here versus blindly not seeing them, right? If you only have the 10 and 20, as you can see, now you're thinking, oh, hey, it's broken to the downside below the 10 and 20. Now I think we're going to keep going down. Well, the question is, how far down? How far down is the price movement going to go? But now you know potential levels that it could bounce off of based on knowing where the bigger SMAs, right? So hopefully that makes sense. Any questions so far? Come on, guys, it's just us. Unmute yourself. Let's talk.
How does the crossover work with the addition of the 50? Do we still just account for the 10 and 20?
Yeah,
The
the 10
crossover?
yeah, the 10 and 20 crossovers is still our initial signal, but I'm using the rest of the bigger SMAs like the 50, 100 and the 200 SMAs as your supporting levels, right? So if you're trying to figure out where is your next support level potentially could hold to bounce, you could use them instead of having to look left all the time. Now I use my SMA. So as you can see right here at this location, if we put a line right about here, and I'm gonna extend this to the left. Okay, save. Okay. So as you can see, it extends to the left because this is where the bigger SMAs. If you look left, it supports that this is the chop zone area. So meaning this is where there was a demand zone, basically. This is where the buying kind of hanged out, right? Not necessarily in particular direction, but this was where heavy buying and selling was um, happening. Okay. And that SMA, so simple moving average, is basically calculating that for you already rather than having to look left. So yes, you still account for the crossovers, potential downside, but the bigger SMAs gives you a level to where it could bounce or where it needs to break through for further move to the downside. Okay. And another thing that we have, so make note of this, right? So 10, 20, 50, 100, and 200, and then this yellow line right here, this is actually my opening price level. You can add this yourself. It's just a previous open or opening day. Say it's the daily open. So that's the actual name for it. Daily open, you can add that. It just gives you an idea what price, what level it opened. You can manually put it yourself or have the system automatically mark it out for you. This level is very strong because this indicates the current market or this particular stock. If it's below the open price, it's potentially weaker. You could sell off some more. If it stays above the open price, that signals that, hey, this stock is still strong. The buyers are still winning in this particular stock. Okay. And you could use that as your guide to strengthen your thesis on whichever direction, right? So like right here, if you got in right here, let's say you're doing a swing trade. If you got in right here at above the open price, then it gives you a conviction. Okay, if it's above the open price now, this is bullish. So then you hold if you want to swing, unless if it breaks below the open price, then you have to consider that. Okay, this could potentially sell off some more. Okay, it's all about having a line in the sand in this case in your chart, a clear line for which side of the trade you want to be in. Okay, so that's the open price. Let's see what else did I add on here. Delete this real quick. So the SMAs, which is the stack, and then the daily open price, and then also, um, you guys know about the volume profile, right? So the volume profile, it just tells you where the most traffic of transactions had happened, which is basically buyers and sellers transacted the most, and it gives you that level. So this, you can kind of see it right here. I have it faded pretty significantly because I don't want my chart to be cluttered up. But you can see this shaded area, right? So this is showing you. So I'm gonna graph this out right here. So now you can see it, right? Okay. So as you can see it, the most transaction was happening from up here to here, but the most price level that it transacted at is this green line right here. Okay, so it's telling you at 157.32 where the most transaction had happened. So how do you use that information? So that information tells you that buyers and sellers are agreeing at this price level. the most. They're saying 157 $157 is the most fair value of this stock right now. Okay? So, and how do you use that information? So you can use this information right here at 157 zone. Of course, you want to give it a range, right? 50 cent down or 50 cent up, and you can give it a range. So you can call this as a zone, right? So let's say a stock starts to run up, starts to rally up, okay? When it rallies up, okay, now you know this is the agreed on price based on what it's telling you on the volume profile. The next time the stock falls down below here, this is you can use this strong zone as your support because this is where the most traffic is going to happen again, whether you like it or not, right? I'm not saying it's gonna bounce. I'm not saying it's gonna continue through, but just know the most transaction again is gonna happen right here. So if you're going long from here, just know that, once it reverse, this is the most level that everybody's paying attention to. Okay, so if you're shorting up here, don't don't hold a position expecting that this is just gonna blast right through. It'd be a safe bet that you take your profits right here and then wait for another signal. Let's say it broke below this zone, right? It broke below here. Once it breaks below here, then you can use that area as your resistance to go for the stock to continue to fall to the downside. Okay, so that's how I would use the volume profile. Okay, again, this is just layers in addition to your SMAs. So if your SMAs, obviously, that's pretty clean signal that if this is your zone right here, right? This is your zone. This is the buying zone, and the stock falls below that price, likely you're going to be below your 10 and 20 SMAs as well. And that gives you a layer of conviction that says, okay, we're below the 10 and 20, all this stack, and now we're also below the volume profile. Okay, this is a strong conviction that is a higher probability that this is going to trade to the downside. Okay, that's how you use the volume profile. Okay, the next layer of supporting indicator is down below here. How many of you have used the TTM squeeze before? Who has used them? Alex
At
have
the same
used them.
time.
Yep, me and Alex has been using them a lot. We've been really paying attention to its colors and indicators and whatnot, and how to read them is what I want to go over next.
Perfect.
Awesome. Okay, so the TTM squeeze. Okay, what does that mean? You can Google it, TTM squeeze. Some brilliant option traders created this code actually uh, based on 30 years of experience of trading in the stock market, which is pretty amazing. It's a combination of many different signals like the SMAs, the volume, the divergence, or what was the other one? Bollinger Band. Like all those different indicators, he basically combined them all because he saw there was a correlation to all of it. And when one signal fires off, to the upside, it confirms with another indicator. So instead of having, dozens of different indicators on your screen, he created this simple um, combined indicator. But of course, you have to learn how to read it. You can YouTube it. Just type in TTM squeeze or there's just gonna be a couple different ones. Here, let me show. Let me see if I
Yo,
can
just
show.
recently about it. That's the best video of it from S&B Capital.
Oh yeah, yeah. The S&B Capital. Actually, did I post
It's
that
on.
on the main chat?
Yeah, yeah. It's on the main chat. Just a couple
Okay.
messages above.
Okay, guys. So go scroll up to the main chat. Um, when did I post that? Oh, right here. This was on 5/1. I posted it on 5/1. So that webinar right there, watch that. Like really take notes to it, okay? This guy made like $5 million in one trade because of his signals, his own indicator. Okay. Of course, he's got a massive account, so take that into consideration. But yeah, watch that video, okay? And it'll explain it. But right here, the TTM, there's TTM LRC, scalper alert, TTM squeeze, the trend, and the wave. And I haven't yet to learn all of it, but I know the TTM squeeze, the trend, and the wave, okay? Right now, I'm using the TTM Trend, which is the actual chart itself, the candles. As you can see, my candles is different. Okay, I'm going to show you um, how different that is. Let me show you real quick. So let me see. Okay, so these charts or these candles that you see here, they're both TTM Trend. Okay, and then I'm going to show you um, the the difference when I turn it off. Let me see here. Okay. I'm gonna turn this into a 5 minute. Okay, so basically these two right here are both the same time frame, 5 minutes. But what do you see? What do you see differently on the candles? Come on, guys. This is participation. What do you see different?
The
Like
pullback
the
is
uptrend.
versus red.
Okay. So okay. So the pullback, these are red, but the main thing is on the regular candles right here on the right hand side. Okay. The right hand side, it's going to be green when it's going up. It's going to be red when it's going down and whatnot. But as you can see, there's so many different changes, right? It fluctuates green to red, green to red. But on the TTM trend, it calculates the candle. It stays red if it's still below a certain level. Like even though the candle, so some of these candles right here are filled. This red candle right here is filled compared to the other one. So the filled candle, I have it indicated as it that candle itself was going up. So as you can see on the right hand side, right here, I'm gonna put an arrow on it so you can see it. So right here, so this candle, it on the TTM trend is showing red, but on the regular candle it's showing green. Okay, but it actually calculates a certain level. I don't know the exact levels it calculates, but as you can see, it's still below a certain levels up here, and that's why it stayed red. So what this does is actually cuts out the noise emotionally, right? Because now it's still telling you it's red. So if you're long bias on this, or if you're short bias, actually, if you're short bias and you're on a short trade from like let's say up here from this level, right, and it starts to go up here on the right hand side, if you're just using the regular candles, it's turning green. Your emotion is going to trigger to go, oh my god, it's going green, it's going to squeeze up, or it's going to keep going up. But on our left hand side, the TTM trend is still red, so that gives you a confirmation, hey, this stock is still short bias, it's still heavy on the downside, right? Until it turns green at certain levels, you can see right here, then the green candle showed up. Like it actually matches with here. So now that tells you it broke a certain level that now the buyers are actually winning. Okay. Versus here, the buyers were still not winning. The sellers are still in control because it's still below a certain level. So it benefits you if you're staring at your screen and you get emotionally triggered because it's a green candle and it could potentially like create this false assumption. Okay. So that's why I use the TTM trend in that case. And then down below, this little waves that you see here, this is a TTM squeeze. So the way that video explained is when you start seeing red dots like this level right here, right? This is indicating that this level, currently this level, is having a lot of conflicting, not conflicting, but the buyers and sellers are equally fighting. Okay, so that means there's a lot of buyers loaded up and there's a lot of short sellers loaded up. So what's that mean? That means this thing is at high pressure, okay? High pressure. So let's say there's a million, shares going long and there's a million shares going short. They're loaded. The base is loaded, right? So that means when it makes a move in any direction, is gonna be volatile. It's gonna make a bigger move because the base is loaded, right? That means the other side of the trade is gonna have to exit. And when you exit a position, it accelerates that direction, right? So let me give you an example. If this stock moves to the upside, let me see here. So if this stock moves to the upside, all the short sellers will have to get out of their position. So therefore, they become buyers, right? They'll have to buy their short positions to close and cut their losses. Well, now that instead of 1 million shares going long and 1 million is going short, now you're going to have 1 million shares going long and the shorts become 1 million shares also to buy to cover. And now you have 2 million shares going up. Is that making sense? And that's why it's loaded. Now when you see these dots, okay? So it can go in any direction, but it just gives you a preparedness to go, you know what? This level right here, I'm ready to take a trade once it breaks, a zone. Let's say that's the level and you have a zone of like right here or something, right? So if it breaks to the upside, you're gonna take long. If it breaks to the downside, you're gonna take short, and you know that it's gonna be a heavy move. At least it's gonna give you a good range in either direction. So that could be a setup that you can prepare for rather than randomly getting in like at these levels right here. Randomly getting in, right? It's a lower probability because you don't know where it's gonna go or where it's gonna stop, right? Hopefully that makes sense. Okay. So those are the most recent additions to my charts rather than just the 10 and 20. And if you want to learn more about the TTM trend and the TTM squeeze, watch that video that I posted on May 1st. All right, it's a pretty well explained video about the TTM squeeze and TTM trend and TTM wave. The guy that created the indicator, his name is John Carter, and he's got about 30 years of option trading experience. Okay. Any questions?
Oh, it's not a question, TJ. I am following this indicator called Super Trend. Now I know what the hell the red candle going up and the green candle going down. It's a TTM trend.
Hmm.
So yeah,
Remember
just
when, which one did you trade that I called out the directions levels before it
um
even gave you that signal?
I forgot, but I only just trade SPY and um freaking Tesla.
Yeah,
So
that's awesome.
yeah.
So that's good. So for those of you that are doing option trading, like you don't have to trade many different ticker symbols. Like you can literally trade the SPY, and SPY is very affordable when it comes to options contract, right? You can buy a $50 contract or a $100 contract. And the beauty thing about it, there's three expiration days in a week. You got Monday, Wednesday, and Friday. So you basically have three lotto trades in a week. And for those of you that have small account, you can build your small account once you get the hang of using all these indicators to give you a better edge on your trade. Okay, you can trade the SPY on a small account, and once you have a bigger account, you can just trade SPX. They're both the same. They do very similar moves, and the SPX is more expensive when it comes to contracts. Let's see here. So here's the SPX. Do just 10. Okay. So as you can see, the SPX contracts is roughly about um, $1,300, one out of the money contracts versus the SPY. Let's see, the SPY is only about 500. So it's almost twice as almost triple as much um, in comparison. But on Mondays or on same expiration day, these are going to be a lot cheaper. They're only going to be about $300, you know. So they're perfect for a small account. Ideal to trade just one or two ticker symbols because that gives you a much um, cleaner or more time to really understand the chart behavior. Okay, instead of having to be distracted with many different ticker symbols and having to learn each one and how they behave, just spend time with SPY or whatever ticker symbol you choose, one or two, and just master their behavior, right? And you'll get more consistency that way, faster versus being, squirrel mind to, 10 or 20 different ticker symbols and try to find an edge to trade. Okay, you'll learn more about the SPY behavior faster when you trade it every single day and really pay attention to its behavior. And once you get good at that, you can build an account and then start trading SPX. And I know, bigger traders that just focus on SPX. They'll literally, you can make millions of dollars on either one of these ticker symbols. There's plenty of volatility. If you ever watch the SPY level 2 and the tape on a trading day, I mean, it moves like a low float stocks. Like it's level 2. It moves so fast. There's so much volume in these two ticker symbols. It's crazy. So there's plenty of liquidity. You don't have to worry about, not having enough contracts or enough shares to trade. There's plenty there because that's where the big boys play. Okay. All right. So as far as that, again, this is my setup right here. So I'm typically looking at the 1 hour. You guys already know this. This is 15, the 5 minute, and then the 1 minute. Now, for those of you that don't remember why I have this setups, is because it allows me to see the levels on a different time frame on where the bigger picture is. So when you look at the bigger picture trend, let's say on a 1 hour, right? I'm looking at the Apple here. Apple's consolidating at this zone pretty heavily. So 157, 158, it's a heavy, heavy zone that is, there's a lot of longs, a lot of shorts. So meaning once it starts advancing on any direction, it's gonna see some range. Okay. And then the 1 minute and the 5 minute gives me confirmation for entries. I'm using the TTM squeeze indicators to where I could enter. Another thing that I forgot to mention on how to look at the TTM squeeze indication right here. So right here, like you see the light blue, dark blue, and then you have red, and then yellow, and then you have green dots and red dots. The red dots, I don't know exactly what it means yet. I have to look at the video again, but I know the red is a squeeze um, indication. That means the base is loaded again. You have longs and short equally fighting at a level. Okay. Um, the dark or the light blue. So once the light blue forms, it tells you that buyers are winning. Okay. Once the dark blue presents itself, the buyers are starting to lose. The buyers are starting to lose. So this candle right here, the buyers are losing and the sellers are winning. So typically, based on that video explanation, once the way he uses it is once you get two consecutive colors fire on any time frame. So in this case, this is a 1 minute, and if you're looking at the smaller time frame like the 1 minute, this is more of a scalping time frame, right? So the way he uses it is once you have two consecutive colors presents itself, likely that trend is going to continue. So as you can see right here, right, blue fired off, but watch the actually let me look at on the TTM trend, the 1 minute. Okay. So where was I? It was right here. Okay. So right here, right, you got two consecutive blue signal here, one, two, right? And then if you look up right about this level, right? So right here, it's telling you that it's a green candle, but it's telling you the sellers are winning, okay? The buyers are losing. And then as you move up to the next couple candles, green, 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 it's telling you that these are green candles, right? So emotionally, if you're just looking at this, it's telling you, oh, it's gonna go up, it's gonna go up. But the TTM squeeze, they're still dark blue. Dark blue means sellers are still winning. But why is the candle going up? So remember we talked about false advertisement, right? This is how you can determine that this is false advertisement that the stock is going up. This TTM squeeze is telling you, hey, sellers are still winning. So the chart is telling you it's going long, but the squeeze itself is telling you this is false. And the more you study this and match it up with the price candle, the more you're going to be convinced on how to really rely on them. Okay. I'm not going to tell you to just blindly take a short, but I'm just telling you this is just a layer of confirmation that you can wait maybe on the next red candle right here. You can take that trade because it's been confirming that this is still downtrend. You got a little light blue right here, which is this last spike. So technically right here, it could have turned into a long, but then immediately the next candle was a dark blue, which is seller took over again. Like actually, this candle right here, it's still a green candle, right? But it told you that this was selling candle, and then from there it just kept going down, kept going down. Okay, so hopefully that makes sense. Before I go over to the red and yellow, does that make sense to you guys? Come on, guys. You guys are so shy to talk.
Did you hear me? I said, yeah, that does.
Okay. Yeah, I didn't hear you the first one. Um,
Oh,
so yeah, so that's basically how you can read this TTM squeeze candle bars down here. Okay. Once you cross over the zero line right here, the middle line, right? Once it turns red, that gives you an even better confirmation that it's gonna go down, right? It's gonna go down. And so the red candle is just it's simple as that. It's all the sellers, 100% sellers are winning. Buyers are doesn't stand a chance. But the moment it turns yellow, now it's the opposite. Now the buyers are starting to come in. The sellers are still winning, but the buyers are advancing. The buyers are now gaining some traction to push it up. So as you can see, like the second red or the second yellow candle, which is this guy right here. So second yellow candle presented with this candle right here. You match it down below, this guy, right? So now it's confirmation like, okay, buyers pushing, buyers are still pushing. Now sellers are starting to lose. And you can see it right here, right? Now it's starting to move up. And then from there, it fired up. So you could have taken the trade right there, and then your stop loss would be like close below this 10 SMA, right? But also remember what I said. This is about layering your your indicators. So let's go over this. This candle right here is green. On the TTM squeeze, it told you it's the second yellow, which is buyers are winning. And then another confirmation is this green line. This is your volume profile. It's above that line, so it's bullish. It's above the rest of your stronger simple moving average indicators, right? It's still above the 50, the 100, and the 200. So you have a bullish momentum. So now you've layered your conviction. You have the volume profile, you have the TTM squeeze, and you're above all your indicators or your bigger indicator. So you could have taken that trade to go long and caught this move, right? You'd been really happy, especially with options. This is like a good I would say 15, 20%, right? Quick little scalp, and then your stop loss is closing below the 10, right? Because remember, you're still below, you're still a downside selling in this case, but you could have scalped this based on layering your indicators. All right. So light blue is bullish, okay? Dark blue, now sellers are starting to step in. Buyers are getting tired, okay? Red is just all sellers. Sellers are winning. And then yellow, buyers starting to come in and fighting the sellers, and sellers are starting to lose. Not necessarily losing, but starting to, because buyers are now overwhelming them. And then as you can see, it kind of took over. Once it crosses to the upside, right here, and of course you're bullish again and repeat the process of reading the color of the candle. That's it. The challenge is reading that on the live market, and you're in charge of your emotion from there because I can't help you with that. That's going to be an ongoing basis. But I'm giving you a rundown on how you can layer your conviction of your trades, whether it be long or short, by using all these indicators. Cool. Now let's go with questions. Let's clarify some stuff.
uh, candles to for it to where did you go to do the um, fill the candles to get filled in
Oh, yep.
when it's
Okay. Let's go over
so
that.
it's still downtrending but they filled in.
Yeah. So the
Where'd you
settings,
where'd you go?
the settings, right?
Yeah.
Okay. So the settings, let me go over how they apply right here. So all of the upticks candles, if it's going up, um, they're filled. Okay. All of the down ticks, which is sellers, they're not filled. So you can see it right here. It's kind of, it might confuse you. Like this candle is filled, is green, and this candle is still green, but it's not filled. But what that means is this candle right here is still, it's still on an uptrend, but sellers won this candle. Okay, sellers won this candle. When it's filled, buyers won that candle. It's the same thing on the red side. On the red side, now you have a downtrend, so it's a clear indication that once the candle turns red, now it's downtrending, and then once the red candle is filled, obviously the buyers won that particular candle, but it's still downtrending. It's still bearish. Okay,
Where
and
did you go to do that
and
settings?
then and then the settings to do that, you just go on your the wheel right here, charts. You can see
Okay.
that, and then you go into your appearance, and then right here it says fill up and fill down. So I only want the uptick candles to get filled. Okay, and leave the fill down, and you can do it vice versa, however you want to read it, but all of the upticks I want it filled, so that when I can tell that, hey, buyers won that candle. Okay, or you can fill the fill down and leave the fill up blank, so you know which candles sellers won. Okay, so it's all preference based, but this is where you go right here. Make sure your chart type is candles. Okay, and then you just hit apply and you can save it and all that good stuff. Um, the TTM trend, again, you just go into your study right here, edit studies, go search and just type in TTM, and this is all the different TTM indicators that you can add on. And remember, this is on Thinkorswim only. I don't know if other platform has it. I'm sure they have them because this is a licensed indicator. Um, to edit your candles, so just go into the settings right here, and you can change the colors, the width, and whatnot. But just make sure it's standard settings. I didn't mess with it. It's just the standard settings, and I just applied it and hit OK. You can change the colors if you want. That's all up to you. Let's see what else. Oh, and then the TTM squeeze. Again, this is a default settings right here. These are all default settings. I didn't mess with them. On the, let's see here, volume. Yeah. So there's all standard settings, no changes required. Okay, and that's pretty much it, guys. You can use all those and really study them. Watch the training videos on YouTube. There's a lot more you can YouTube more different other people explains it, but really just understand these indicators. And I like them the most so far, in addition to my 10 and 20 SMAs, right? It's just I'm layering the convictions. And if it doesn't work for you, it doesn't. If you don't understand it, then I'm just giving you an idea what has worked.
Right now at 406, it already hit 405.86 tonight.
Which one?
SPY.
SPY. Let's bring up SPY.
So I looked up at the charts, looking back left. I mean, what if this breaks, dude? It's going down
Yeah,
to
it's
like
it's
three
it's loaded.
to three freaking 85.
Yeah, so as you can see right here on the 1 hour, look at the TTM squeeze. It's all red. So remember, red dots means it's loaded. The base is loaded.
Yeah,
Not necessarily, I don't know which direction, but when it fires to a direction, it's going to be a pretty good move. And then if you look at the smaller time frame, like right here, the 15 is already telling you like it's downside, okay? And then look at the 5 minute, it's trying to push up. So in conflicting signal, right? It's a conflicting signal here. So the 1 hour is saying okay, it's downside. The 15 minute is downside. The 5 minute is upside. You're like, wait, I'm confused. Well, you have to look at it this way, right? The 1 minute and 5 minute are your starter, especially for the 1 minute. This is what we call the trend starter. So whatever the 1 minute is doing, that trend, we don't know how far that trend is gonna go, but at least you have levels to go off of where it could reverse. But the bigger picture is still say, hey, we're strong to the downside. We're very strong to the downside. Okay, you can even go on the bigger time frame like the 4 hour. 4 hour, boom, look at this, red, 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 no yellow, right? No yellow means buyers hasn't stepped in, right? Not enough buyers stepping in to convince the overall bigger market to go, hey, buyers are starting to win. Let's be cautious on the short side now, right? This is in the 4 hour. Now let's look at the daily. The daily, okay, we have some signal here. You got yellow. You got one, two, three, four yellow. So right here, this is a lot of buying happening here. Will the buyers win? We don't know, but we know that's on the daily. It's they're in here. They're hanging out around this zone. Okay, and this is how you can kind of decipher this information, right? It's a time frame basis. If you're looking to scalp, go in a smaller time frame. If you're looking to swing, go in a bigger time frame. But obviously, swing trading requires you to be patient for multiple days, sometimes a week or a month for your trade to happen, right? So that's how I use it. So, Alex, what do you like this indicators?
you can't squeeze them.
What's
Building trust in it and not getting faked out as well. Like if it's showing up and like we looked at, um, and they spike it up, but the trend is still facing down. I'll hold on. I mean, I'm practicing
hmm
building that trust again, but I'm noticing that ETM squeeze is actually stronger, and you can hold it and see that they try to fake you out, and it actually goes your direction.
hmm Yeah, we did a lot of following the TTM squeeze indicator on Friday, and based on those signals was pretty accurate for the most part. You know, these indicators are not 100%, but the percentage wise is higher on accuracy. So it's just putting in more screen time, watching them live on how they behave and how they present themselves, and how many times is it accurate, and how many times is it not accurate. And the more convinced you are, the more you trust these indicators, the better you are on your execution, right? When you execute your trade, you have conviction. Once you trust it, you go with it. Once it breaks, you get out. Then it gives you a clear line to go off of rather than just not knowing when to get in, when to get out. Now you should know. You have something to go off of. Cool. All right, guys. Any further questions before we take off? You guys are pretty quiet tonight, besides Alex.
Yeah, I got
Hard focus.
questions, but it doesn't have nothing to do with the indicators.
You have what?
I have questions, but it doesn't have anything to do with the indicators.
All right, fire away. What's your question?
So I was just in a session earlier, and so who's following who? Like Apple and Microsoft following Spy, or Spy following them?
So that's actually a great question. So learn who is in the S&P 500. Okay, so let's go in, what was it?
Because
Is it
when I was in the session earlier, they're saying
red?
that Apple and Microsoft is following. I mean, no, Spy is following them. So if Apple goes down to 150, then Spy is gonna go with it, and Microsoft goes down to 270, then Spy is gonna go with it.
Hmm. So, okay, so to answer that question is kind of a mixed bag of answers. So right here, okay, so under your watch list, right?
Yeah.
You can choose whatever watch list you want. So on the top, what was it? Public. So public S to W, you have S&P 500. So then you have to
Yeah.
ask, who is in the S&P 500? This is your answer right here. So this list right here is telling you S&P 500, which is the SPY, right? This is all the company that is in the S&P 500. So the SPY is an accumulative, right, average movement of all of these combined.
Okay.
Okay. So then you have to look at, okay, who is the big players in this 500 list? So you have, I mean, basically all the names. You have Tesla, Amazon, Apple, Microsoft, Nvidia, Triple Q, or not Triple Q, but like Shopify. Like these are all the companies that are in the S&P 500, which is the SPY. So the SPY is just an average of all these 500 companies. But the biggest movers, like the Amazon, the Tesla, and all that stuff, they're the one that's moving the SPY. So if your question
Okay.
is who follows who, it it doesn't really follows each other. Is whatever the average of all of them are doing.
Okay,
Okay,
I get it. Okay.
is that making sense? So it's kind of confusing,
Yeah.
but yes. So if you see SPY starts to move in a direction, right, and then Amazon or Tesla hasn't moved, the probability of it moving to the same direction the SPY is moving is pretty high. Okay. So vice versa. If you see, let's say, Tesla, it starts to spike,
Yeah.
and then SPY is downtrending, you can expect Tesla to go down,
Lava.
or
Okay.
or SPY to go up, right? It's confusing, but that is for you to decipher the probability,
Okay.
right? There's a probability that one of them is going to reverse to follow the other.
Yeah. Seems like we're still in a bearish market, so they're it's probably still gonna go down. That's what the session was about today with another that I'm following.
Hmm.
Yeah.
Yeah, and
That's what,
everybody I'm following through, they're all bearish, on
yeah.
this side. They're just saying, "Hey, be careful. This could really fall off the bottom." Everybody's thinking like,
Yeah.
"Oh, this is the bottom. This is the bottom." Like, just be prepared that when this bottom doesn't hold, we're free falling.
Yeah.
There's a long way down. Let's look at the daily on SPY to kind of give you a perspective on where is the next level.
And they
So
said that the support at 400 is really, 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 really strong.
So
So,
400,
so
yeah,
they said if I
400
break
is
that,
pretty reliable. And your next level is not till like 340.
They said 360.
Okay,
So
360.
yeah,
So 360. Okay, so 360 is this level right here, but 340 is your next spot, and then next zone. If the 400 doesn't hold, 385 is your next zone. Okay, like these are your zones right here. So if you do that, you can expect these levels. And remember, SPY has been moving like a freaking low float stock, so it's giving you, $9 to $15 range in a day. That's pretty significant for a freaking $400 stock. Okay, so that's that, man. Just be cautious that the hedge funds, and able for them to unload billions of dollars in positions, they have to attract buyers. They have to paint the charts that's going up is strong, or whatever phony news they got to put out, right? But at the end of the day, we know that this market overall is super extended. Everything's overpriced, housing's overpriced, inflation, interest rates. There's so many indication that we are super inflated, and the price needs to make a correction to balance itself out again, to where consumers can say, you know, okay, I don't feel like I'm overpaying anymore, right? I mean, you don't even have to be a stock trader or an investor to know that right now everything overinflated. Your gas prices, your groceries, your cars, your used cars, your housing, everything, right? So in that case, we know that everything's overpriced. Everybody's gonna slow down from buying until they feel like it's fair market value again. Okay? Fair market value, I feel like around 350. 350, we might balance around there. So, okay? Keep an eye on SPY. So with that said, guys, happy Sunday. We'll see you tomorrow, early morning. Actually, half hour, half hour after the bell, and then we'll start trading options. We'll see. Well, depends on the volatility and action.
PJ, does that mean you're tracking SPY and trading it?
Yes, sir. Yes, sir.
Oh, nice.
Yeah. So, like I said, I'm more paying attention to the option side, because the large cap volatility is there, right? With the small cap for scalpings, it's really not there right now for me to put attention to it. So right now, my attention to large caps, and able to scalp large caps, or just scalp it with options. You can do a small account or a large account. You can get pretty significant gain. All right. So let's do some options, guys.
Sounds good, guys.
All right. Appreciate you guys for tuning in. We'll see you guys tomorrow morning.
Good night.
All right. Have a good night.